everyone, welcome back. So I made a little over $400 in the space of 17 minutes, and no, it didn't come from using indicators, EMAs, or even ICT concepts, right? So in this video, I'm going to be going over how you can declutter your charts and actually have full clarity as to where to trade from, what to look for, and why you're looking for it. You see, most traders get stuck on lots of different concepts in the market instead of understanding what moves the market fundamentally. And so I'm going to be breaking that down in this video. So I took a long on ES futures roughly over here, and I'm going to be going through an entire lower time frame breakdown. Now, when I trade, there's only three things that I use in my entire strategy, right? So my strategy consists of a key level, an entry, and then an order flow. Right, so those are the three things I look for in all my trades, right? So just going to be breaking this down for traders so they can understand. So this was a long trade I took on Monday, the 2nd of February. So executions were at 69.92, stop loss just below 69.88, 87 area, targeting 70.0405. So here is the actual trade itself, and I'm just going to be breaking down how simple it is to get a plan and to get a game plan. So what's really going on here is the market tapped into my levels between sort of 11 and 11:30 Eastern. Now, just a couple of things to break down. If you're a lower time frame trader, an intraday trader, or a scalp trader, right, this video is going to be for you, because the amount of traders I see that have VWAPs on their charts or EMAs or just random fair value gaps and ICT concepts that don't need to be there. I want to make things super clear in this video. So if you look at the way I trade, right, what I typically do is I define my key levels before the market opens, right? So I'm just going to be going to my pre-market plan, which looks something like this. As you can see, right, we had three levels, key level 1, 2, and 3. So what was going on is we had a break above 3, and we were going to target the upper level, so key level 4. And so that's basically the entire thesis of the trade itself. So again, the way that I like to approach the markets before they open, right? Before the market opens, so at 9:30 Eastern, the market will open. I will have my key levels defined, right? So key level 1, key level 2, key level 3. Now, if you're a trader who's struggling with higher time frame buyers or session buyers, or you have any of the problems where you're not sure where to start from, or you have chart confusion, a lot of that can be solved if you know how to find your key levels, right? So I've made a lot of previous videos on how I find my key levels. This video is going to be about execution at those key levels. But just to break things down, if we have key level 1, key level 2, and then key level 3, what was going on Friday, I took shorts over here, and on Thursday, this was a key level of supply, right? So supply was holding here. So the main idea, the main logic is when you see areas of supply, you want to see the market coming back to those areas, right? That is step 1 of the model. Step 1 is identifying your key levels. Now, once you've identified your key levels, trading then becomes a lot easy, because let's say we have key level 1, 2, and 3. If we break above 2, then we target 3. If we break below 2, then we target 1. Right? Or if we break above 1, we target 2. So the simpler you can make your trading from a planning perspective, the more success you're likely to have. Right? So that's kind of how I plan my session, right? So if we go down now to a 1 minute time frame, what am I looking for on the 1 minute time frame? So again, if you're on the 1 minute time frame and you don't have your levels defined, or you don't know how to find levels, or even worse, your key levels are incorrect, you're basically gambling, right? So the difference between trading and gambling is defining your levels, understanding what to look for in those levels, and then executing based on what the market says in those levels, right? It sounds simple, and I'm just going to break it down. So I have a rule in my trading. I don't trade the first 5, ideally the first 15 minutes. So for those who trade the ICT orb, understanding the first 15 minutes is very important. 9:30 to 9:45, right? This 15-minute window is the most important. So I don't even look at the order flow. I just want to see how the market develops. So what we're looking at we're looking for the 15-minute range high, and we're looking for that 15-minute range low, just like this. Now, one thing I've found is that the best buy setups, or the most reliable buy setups, will come after we've broken the 15-minute high for a long, or for a short, we want to be breaking the 15-minute low. But in this case, this is what we had. So if we look at the market here closely now, again, from a session bias, I've got key level 1, key level 2, key level 3. And so the secret to trading comes down to understanding how to find these, right? These are very important. So this is ES futures on the 15-minute time frame. So this is going to be 69.63, 69.89.90, and then 70.04 to 70.08. These are the 3 key levels you need. Right, and so now we just continue to play price on. So in the Discord, I give live updates on what I think is going to happen. So again, we've broken out the 15-minute range. So this was on, again, 2nd of February at 10:02. What we're seeing is we're seeing a break outside of the 15-minute range. We're tapping into one of those key levels, right? We're seeing our first rejection. Right now, I typically will not go short on the first tap, right? So a lot of people say, why wouldn't I go short on the first tap? I want to see at least 2 taps into a key level for me to go short or long, right? The other thing is we've broken above the 15-minute range high, so that doesn't give me good feelings about taking a sell when we're quite clearly bullish in terms of the 15-minute high, right? And this is what's interesting here, right? So just from a footprint chart perspective, let's break this down. Right, so we've come into key level 2, we have our rejection, right? There's our rejection. So let's try and understand key level 2. So at key level 2, we break above key level 2, which definitely shows us we're bullish, right? I just want to break down why we are bullish there. So on Friday, right, if for those who follow me on YouTube, on Friday, I took shorts here. So this was an area of supply from Friday. Now on Monday, we quite clearly break through. Right, so what's going on here? This is a flip zone, right? Supply zone flips to demand zone. So in other words, sellers are in control and then buyers are in control, right? That is the power of having key levels. Once you know where the key levels are, you simply wait for those areas and you just trade the flip, right? If price is breaking supply, you want to be buying. If price is holding, you want to be selling. That's a basic kind of framework over there, but let's break down these in terms of 3 simple steps. So what we're seeing now is we're seeing a break above the 15-minute high, and we want to be focusing on a few areas, right? Typically what's going on in the key level and our extreme reactions. So let's call this A, let's call this B. Now this is a lower time frame order flow case study, right? So again, we have the 15-minute range, we have our key levels defined. We're now relying on order flow to tell us what's going on, right? So again, let's take a look at these rejections step by step. So at A, what do we see here? A ton of aggressive buy orders, right? Let's dive into this, right? We see these buy orders, right? Tons of aggressive buyers stepping in. Then we see the buy orders up top, right? The numbers are not important. You've got to understand the color of the delta. So here we see aggressive buyers, or we see more buy orders that are trying to drive price up, and we see this rejection lower. So a lot of aggressive buyers are present, but we see this initial rejection lower. So at A, we can start to label this, right? At A, what we're seeing over here is we're seeing passive. Is it going to be buyers or sellers, right? We're actually seeing passive sellers initially. Right, we are seeing passive sellers initially. So this is now 9:50 to about 9:55, right? What we're seeing is we're seeing the aggression of buyers, right? Blue represents aggressive buyers or more aggressive buyers. Red represents aggressive sellers. Okay, so that's one thing to keep in mind. Lower time frame order flow is easy once you understand the color code. Inside the key level, we see this initial rejection of the aggressive buyers, which means that sellers are really passive in this region, right? Sellers are passive. Now let's take a look at B, right? So at B, right, it's the opposite, right? So at A, we see aggressive buyers. At B, we see more aggressive sellers, right? Look at this, right? Aggressive selling, aggressive selling, aggressive selling. Then we break above the zone. Right, this is what's interesting. So at B, we see the opposite of what we saw at A. Right, so here we see passive buyers. Right, we see passive buyers for the very simple reason that all these aggressive sell orders were unsuccessful. Right, these were unsuccessful sell orders. Why? Because we've broken above a previous supply, which means those sellers that were in control previously on Friday were no longer in control. But when we break above a key level, we know that buyers are really in control. And these aggressive buyers, these passive sellers sitting over here, were not rewarded. So what's going on here between buyers and sellers, right? The passive sellers have failed. The passive buyers have been successful as we've broken above this level, right? So that's the basics in terms of order flow and how I'm looking at order flow on the lower time frames. So now from here, the next sort of thing is, again, I'm waiting, right? I'm waiting for a clear break and retest. And so this is how I use lower time frames, right? So I see a lot of traders getting chopped up in, between levels, right? So if you're getting chopped out, or you struggle with FOMO, or maybe over trading or revenge trading, or any of these psychological problems that people face, it's just a lack of understanding of where to trade from. So again, we had our key levels down here, 1, 2, 3. I only trade inside them after I see a break and retest away from them, right? So basically, the entire strategy is about break and retest, right? That's all order flow is. So what we're looking for, what I was looking for here now, just to show you my patience, right? So this was at 10:25 Eastern, and this was at 10:50 Eastern, right? So I'm okay in sitting in a range, right? So if I have my key levels defined before the market opens, I am okay to sit and wait in that range, right? I can wait 15 minutes, I can wait 20 minutes, I can wait an hour, right? I trade from 9:30 to 11, maybe 11 Eastern at most, right? So I'm not looking to force a trade. So for example, the old me would have tried to force a trade over here, right? So this is not a break and retest, right? This is not a break and retest, because what we have here is a break, right? And for me, this is not a significant retest, right? So even if you say this is your break line over here, in order for me to go long, right, I would want to see price come in, give us some kind of reaction, and then go long off here. But instead, we had this. We shot up without seeing a retest back into the zone, right? So for me, this long is not valid, right? For me, this is not valid at all, right? Even though it hit my target, it's not a valid long. Now, what was a valid long, right? You want to get in at the best entry point, right? So in the best entry point comes down to waiting for your level to be hit, right? So there is your entry over here. So you're waiting for price to have a solid entry into your zone. There we go, right? The way that I like to do this is, again, what we had over here, we had the previous area here, right? Let me put that in red. So we had this previous area, right, where what we saw here was the initial reaction from the level. So what you can do is, I like to draw kind of a line like this, just to give me a reference. This for me is an A+ retest, right? I'm looking for a retest into my zone, right? This is not a valid retest. This is your valid retest, right? So now from here, I'm really just interested in seeing how the market behaves at this area. So my longs for that day, my entry or my execution for that day was just over here. So 69.93 roughly. 69.93. So here was my execution for that day, right? 69.93 stops just below this wick, right? Just below this red line. And I'm just looking to target the next key level up here, right? That's all I'm looking to do. That's it, right? So from start to finish, right, what you want to understand is market opened at 9:30 Eastern, right? So market opens down here. I wait the first 15 minutes. I wait for a valid break. And then I wait for the retest, right? So my entry came at 11:08. I'm just going to write that down. 11:08. That is an hour and a half plus 8 minutes. That's 98 minutes of waiting, right? And that's the key with trading. You're not going to get your setups in the first 5 minutes, 10 minutes, 15 minutes, maybe not even the first hour. This was the initial setup that I took, break and retest, right? So the reason this is an A+ setup is because it follows the 15-minute range break. It comes into a key level, and we're targeting the next key level. And most importantly, there was an order flow confirmation over here. So these are the steps that you need, right? If you're trading lower time frames, or you're scalping, or you're intraday trading, right? So these are the kind of steps that I think every trader needs to understand, right? So when price hits your target, we had our target being hit over here, right? So trade entry at 11:08 Eastern, out by 11:24. So it's roughly a 16-17 minute trade, right? So just want to go over the order flow and some of the there we go, some of the things I was looking for, right? So here was my entry, again, 69.92 area. And so this is what I was looking for, right? This is now the final confirmation. So I am only interested in the candles that come inside my key level. So these candles here, so 1, 2, 3, 4, 5, 6 minutes, and then probably 7 to 8 minutes of execution. So I'm only interested in this area over here. This is the absorption area, right? So let's quickly break this down. This is the absorption area, right? The absorption area are only the candles that touch your key level. And so when you're trading, especially intraday trading, the reason it's so important to have your levels is because you need to know exactly where to trade from, right? Where are you trading from? Where is your key level? This needs to be defined before the market, right? This is your key level. Now, once you have a key level, assuming your key level is correct, you then want to look for buyers and sellers, right? So what are you looking for? You're not looking for VWAP, you're not looking for EMAs or ICT or any of these. There's no ICT setup that I'm aware of that's happening over here. Here, there's only the absorption, right? So if we just take a look at the absorption in more detail, what we're seeing over here is we're seeing, I'm just going to go through a few numbers here. We're seeing 297 for 111, right? We're seeing 97 for 2. We're seeing these numbers over here. That's 427 for 99. Then we're seeing 304 for 104. We're seeing 105 for 31, 152 for 56. So the main point of this area of absorption, again, this only works if your key levels are correct, right? So stop trading random fair value gaps and start understanding which fair value gaps actually give you reactions. But once you come into any sort of fair value gap, using order flow to your advantage is probably one of the most powerful things in my opinion. The reason I say that is because you can see immediately what's going on in the zone, right? So if we break above the zone, which is what we had over here, right? So this was my execution. So a lot of people ask me, why did I execute the way I did, right? So the reason I executed here, so I went long at around 92, 93 area. So I went long around here, and I was comfortable to have my stop loss just below this wick, right? And I was comfortable targeting this price point here, around a 1.8 risk reward, right? So the reason I went long here was because of what was going on here, right? This is the absorption. And I want to break this down. It's a very simple concept to understand. So what's going on is there is red delta. Now, what does red delta represent? Red delta just means that there's more aggressive sell orders, right? More aggressive sell orders over buy orders, right? So there's more aggressive sell orders than buy orders. That is the first thing. Now, when you see these aggressive sellers over here, especially these ones over here, a break above the level, what does that represent, right? Were these sellers successful or unsuccessful? So when you come into fair value gaps or even VWAP bounces, EMA bounces, even your standard support and resistance, right? Instead of labeling lines as support and resistance, label everything as a key level and then let the order flow decide whether it's going to be a support or resistance, right? So support and resistance comes down to the very basic principle of who is aggressive and who is being rewarded, right? That's all it comes down to. So who's being aggressive in the zone? Well, it's the aggressive sellers, right? It's the sell orders, right? We see, again, the numbers on the footprint chart represent market orders or the aggressive orders in the now time frame. So it shows you between sort of 11 Eastern and 11:06:07, between 69.90 and 69.86, there are a lot of aggressive sell orders, right? But we break above the zone, right? So what's happening here is we see huge sellers, right, and a break above the zone. Now that just means that this is an area of support, right? Because the sellers failed, it's an area of support or it's a demand area. And hence why you want to be buying. You want to be buying at areas of demand, right? That's the essentials of Monday's trade. I thought Monday was a good little scalp to start the week, right? Now, for those who kind of follow this trade along, so I kind of closed at 1.8R. But realistically, again, if we use some of our volume profiles, what we saw over here, if for those who do trade volume profiles, you should be, we had a POC here, right? We had another POC here. So the market likes these POC areas, right? Point of control just means it's the highest volume area. So here the volume is high, here the volume is high. And so when you go to your lower time frames, this would be your kind of final target, right? For those who took this trade. So just I kind of closed halfway through, but I do believe this trade did rally to the upside as much as it should have. So again, this is sort of using POC to your advantage, right? So again, this video was more about kind of understanding the order flow, right? So understanding when you see these big moves, right, what's going on, right? You need to know where to trade from, what to look for, and why you're looking for it. So this is a three-step model which I teach and coach. And so having a three-step mechanical system that only keeps you on the charts for 60 minutes per day, not 2 hours, not 3 hours, no. You need 60 minutes of concentrated total chart time in 3 simple steps with a break and retest and order flow based model, right? That's sort of the way you want to take your trading in 2026.